Who here wants more money? Who here wants more control of the money you already make? Who here wants more freedom and wants that feeling of feeling financially free? All of us. Think of Braveheart and William Wallace painting his face blue and yelling, "Freedom!" What would that feel like for you? Put it in the chat. Put it down below. What would that feel like to you? What would it do with your relationship, not only with others, your community, your spouse, your kids, but what would it do for yourself? And I'm going to let you in on a little known fact. The wealthiest families and visionaries like the Rockefellers, Walt Disney, have used a strategy called infinite banking for ages to build and preserve their empires. The strategy is simple, it's legal, and it's something that we all have access to. And it all starts with changing just one thing. The one thing is paying ourselves first. Where does our surplus money go? Shockingly, we're giving away a big chunk of our money every time we get paid. And we're giving it away to the evil empire. Who's the evil empire, Jason? Well, I'm glad you asked. It's the banks, the government, and Wall Street. And do you want to know how you can recapture and recycle all the money and bring it back into your family? Do you want to know how you can make money with every car you buy, drive, and own? Do you want to know how you can secure your family's legacy for the future and make sure you're leaving things in a better position than you found them for the things you love and the people you love? Well, it all starts with changing one thing, where your money goes first. So get ready as we're going to dive in today into the infinite banking process. Again, I'm going to show you how you can make money with every car you buy, drive, and own. I'm going to show you how you turn your debts into assets, how you can see how the banks make their fortune, and you can do the same thing, and why success leaves clues, as the big man Tony Robbins says. So I thought that this was unbelievable. This was something to me that seemed too good to be true. When you first hear it, it may seem too good to be true for you as well. But I'm just asking you to keep an open mind. To just keep an open mind that if we make this small change, this one change, it's going to be all those things I asked in the beginning. It's going to give you more money, more time freedom, and more faith that you can accomplish the things you want to accomplish. We're going to go through real life examples, show the applications that you can do right now, and help you become a wealth creator, right? To show you how you can build, keep, and create more wealth. You might think it's unattainable right now, but I promise what you want is within your grasp, and it starts between our ears. So let's dive into this. So I want you all to think about a room, and I was just at my nephew's Soren's high school graduation and watching 284 graduates. But now I just want you guys in your mind's eye to imagine 100 graduates sitting there. And they've just heard the speeches from the salutatorian, the valedictorian, and you ask them, who here is going to be successful by the time that they retire? Every hand is going to shoot up. They're going to be jumping out of their seats saying, me, me, me. I'm going to be a millionaire, a billionaire. I'm going to be the next Steve Jobs. I'm going to be the next Mark Zuckerberg, the next Elon. Right? The next Elon. They all think they're going to be wildly successful. But something happens during our lifetime. Something happens that's insidious, it's slow, and it happens over time that this doesn't happen. Only 5 out of 100 of those grads will be financially secure, financially free by the time they retire. How is that possible? How's that possible? We live in the greatest country, the freest country, the country that has the most opportunities. How is it possible that this statistic, this shocking statistic that only 5 out of 100 people retire with financial security? It's because we are groomed to give up control of our money. We are taught to take on all the risk, and it's costing us our freedom. Don't you think it's time for a change? Time to look at something that'll put you back in control? Luckily, if you're here, you're already the 5%. You're already giving your most valuable asset, which is your time, your energy, and your attention. Everyone's vying for your attention. So I'm blessed that you're here to hear this, to give yourself the ability to achieve your dreams. So let's jump in. There's this great saying. This guy, Will Rogers, says, the problem in America isn't so much what people don't know, it's what people think they know that just ain't so. Again, a lot of what I'm going to teach you today about money, about the truths about money, are going to be paradigm shifts. I want you to keep an open mind, to take notes, to participate. You guys are doing awesome participating already. And I'm going to challenge the way you think about money. There's some truths that you might believe today, and my hope for you is when you come out of this webinar, you will have a more optimal approach to your money. And who am I? Why am I here? Let's go back. We're going to go back in the Wayback Machine a few years ago. I was leading part of a leadership team in a mastermind. Standing there, we're doing an exercise like this, envisioning our future, our 10 years from now. What's our big vision look like? What's our 3-year plan? What's our 1-year picture? What's the 90-day process? How much money are we going to have? Who are we going to help? And we're going through this exercise, and everyone else is getting amped up and jumping up like those young graduates, so excited. I started crying. I was standing there in the room, and I broke down. And I was devastated. I thought, oh my God, like I left a $180,000 a year job to help more people because I saw that I was trading my time for money. I was showing up first like my parents taught me, leaving last, working hard, being humble. And now I'm at this place where I'm doing this because I know there's more. I know there's infinite possibility, and I'm failing. I'm making so much less than I was just a year and a half ago. I'm not even with my family. I'm away from my family. And I was floored. And I realized when I sat down later that night, after realizing this was not my dream, I was building someone else's dream, that I needed a philosophy about money. And that's when I asked my friend, who's a fiduciary with 40 wealth management offices, I said, Brian, I need a financial philosophy. And he handed me a book that I'm going to talk about in a second. And this book changed my life. And I'll elaborate further on the next slide. So stick around and check this out. So what I'm showing you is not a new concept. Again, families, dynasties like the Rockefellers, Rothschilds, Morgans, Stanleys, right? This is how, if there was no infinite banking, no specially engineered whole life, there would be no Walt Disney. There'd be no McDonald's. There'd be no Pampered Chef, right? So here are some individuals that you all probably have read and heard of that support and practice infinite banking themselves. Let's start with this first guy, right? This first guy, there's a rich dad, there's a poor dad. Robert Kiyosaki, he talks to some of our peers and sends them letters and shows them that he talks about in Second Chance, which was a great book. It talks about really shifting the paradigm we're talking about. And he talks about this specially engineered whole life as part of that. And then you have the guy who changed my life, who really started this journey for me back in 2019, where I knew there was more. It's that mindset shift. The big guy, Tony Robbins, he talks about it in section 5.2 in his Money Master the Game. And then the book that changed my life, I like to call him, refer to him as Uncle Nelson, Becoming Your Own Banker. Nelson Nash, he changed my life forever because he had a prayer. He got down on his knees when the market changed in real estate and he needed a solution. He needed someone to rescue him, and he realized through the two things that he already knew, which was forestry and long-term planning and life insurance, there was a path. There was a path for freedom and control, which is what we're talking about today. And then you have my partners. You have Brent Kessler, Chris Noggle, mapping out the millionaire mystery, which is what we're doing today. I am walking you through how you build, keep, and create more wealth. And then part of being the bank is keeping your money in motion, which is God's law. So we're going to, Chris also wrote the private money guide. And I want to ask you guys, this is a fun piece of this. I want to ask you guys, who learns fast? Throw in the chat for me. Who learns quickly? Who picks up stuff like this? Kids. Kids learn fast. And so there's the ability for us to learn as well, but we won't learn as fast as kids. We have some old habits and things. There's this concept of the backwards bicycle. This bicycle, this guy had this idea and designed this thing. And check it out. When you turn a regular bicycle and you turn the handlebars right, you go right. If you turn the handlebars left, you go left. Well, on this bike, it's the opposite. Who here could ride a backwards bicycle? Show of eyes in the chat. Who here could ride a backwards bicycle? Now, I think I could because I'm a cyclist. I love riding. It's the first freedom as a young boy that I had. Just go out and ride for miles and come back when it's dark. That's how I grew up. And I would tell you, I would crash and you guys would all laugh at me. You'd be like, well, Jason, that's ridiculous. You can't ride that thing. Well, go watch this video. I'm not going to spend a lot of time here, but this is the paradigm. You have to be open to shifting your mindset, to realizing the things that you've been groomed by, they weren't even your decisions. Someone else needed you to make the decisions you're making today. Let's change that together. Backwards bicycle, Google it on YouTube, watch it. It's incredible. It's a really good watch. It's very powerful, but I'm not going to spend over 30 minutes having you guys watch it here today with me. So, why aren't more people successful? Look at the wealth killers. Look at the list. Taxes. Right? I always ask people, what are the two pains in life? And everyone's like, oh, I know, it's marriage. It's taxes. No, the two pains in life are the pain of discipline or the pain of regret. We choose. Well, guess what? Uncle Sam doesn't produce money. Uncle Sam's not a creator. Yes, he's giving us the opportunity to live in the greatest country in the world, but taxes. And taxes are at a historical low right now. Then we've got inflation. Think about how much eggs were a couple years ago and how much they cost now. Like just food in general. Like our grocery bills through the roof. Volatility, the market up, down. Right now it's an all-time high, but it's an election year. Interest. How much is interest gone up for mortgages, for cars, for all of the things? It just seems like everything is getting more and more expensive. And really, we talked about how it starts. I keep mentioning this because it is the most powerful thing that I can impart on you today. Money has two parts, math and mindset. The mindset, the fear, the FUD, fear, uncertainty, doubt. Write that down, FUD. Like we got to pluck this FUD. It's like a weed. The more that it's there, that fear, that uncertainty, that doubt, that's one of my buddies, Ben, who wrote that book. It's a great book. Check it out. What we're taught is not the truth. So let's go in and talk about the truth. Who here wants to know the truth? Can I get an I? Can I get an I for the truth? Who likes truth? Can you handle the truth? There we go. We can handle the truth. So let's go through some mysteries of money. The mysteries of money. Reverend Michael Long, he can handle the truth. I like that. What is the definition of money? What's the definition of money? It's simple. Money is simply a means of exchange. We take our money, we buy a candy bar for money, money for candy bar. Money for house, house for money. Money for car, car for money. Money for vacation, vacation for money. It is an exchange of value, and money is only valuable if someone else sees the value in it. So it's nothing more. And money, by nature, the laws of nature, one of the first things we learn in science is an object in motion tends to stay in motion unless acted upon by an equal and opposite force. That is a law. You will not drink water, if you know better, from a stale green pond, would you? Or eat fish from that pond. No, it has to come from somewhere where the water's flowing. If we don't move our bodies, what happens? If we're not constantly moving and having some sort of exercise, walking or something, our bodies break down. Things have to stay in motion. It's God's law. What company uses compound interest? Ooh, I know, call me. Banks, Jason. No, they don't. There is no company in the world that uses compound interest as part of their business plan. The idea is to keep the money in motion. Banks, yes, they will pay you interest, but as I'll show you, banks are maybe a little bit unfair, right, as far as how they work, and you guys are going to be shocked about that as well. Are your dollars worth more today or in the future? Again, back to the candy bar. Think about taking $1 out of your wallet today, or go back in the Wayback Machine 20 years ago and you go to the little convenience store and you walk in, you buy your favorite bar. Mine's a Snickers bar or maybe an Almond Joy today. I don't know what yours is. Write in the chat, write in your notebook. But you go buy that bar, you probably buy 2 for $1. They're probably 50 cents back then. Gas was less than $1 when I started driving. Today, think about the difference. You go take that dollar to your Publix, to your grocery store, you might get to buy half or a third of one of those king-size giant bars, because not only are the candy bars much bigger now, they're also much more expensive. So our dollars are worth more today than they will be in the future, which is why the craziness Dave Ramsey talks about putting your money in a can and putting it somewhere. I'm like, Dave, what are you talking about? Your money's worth less every single day. I want you to use your good, strong money today and grow it into more money in the future. Taxes, up or down? Taxes, are they going up or down? What do you guys think? Up or down? Well, I don't have a crystal ball. It's not Fun Friday yet, or my magic wand, but go to usdebtclock.org and it'll show you, as a country, we're $33 trillion in debt. By 2026, we'll be $44 trillion in debt. Taxes right now are at a historical low. So the other question is, do you want to pay taxes on the seed or on the harvest? You want to pay taxes today when they're historically low, not on the harvest. You don't want Uncle Sam sidling into the picture, be like, hey, partner, I'll have my 30, 35, 40%, because we don't know what they're going to be in the future. And this leads us right into the next point. What do you know about your retirement plan? When I was working and stowing away as much money, because sometimes you feel like I'm behind. Does anyone here feel like they're behind? I'm behind financially. I want more, but I'm behind. You feel this stress, this worry that you got to catch up. Every time I went and sat with Schwab, that's how I felt. I felt like they would ask me 2 questions. Jason, how do you feel about taking on more risk? What? What does that mean? That's an insane question to me. I don't gamble. I don't gamble. I don't go to casinos. I don't bet on games. And when I do, it's only my favorite teams, and it's with someone that, that's in my family. I just don't bet. I don't gamble. I'm super conservative. And the second question was like, okay, well, hey, yeah, you just told me you want to retire at 54, but, what do you feel about 75? It's like, wait, are you seeing me? Are you hearing me? Do you understand me? Did I stutter? How is 55 the same as 75, or 54 the same as 75? I always got mad and I leave angry, and I never did anything about it, so that's on me. But that was the advice I would get. And you go back in next year and you didn't really want to. You want to go in and out of there as fast as possible because you're putting in as much as you can, but that money's locked up. So if you don't know what's happening, the question is where are you today? Are you scrimping, saving, hoping that that's going to work out? Is there any guarantees there? Is it guaranteed to be worth more today or more tomorrow than it is today? No. The only guarantee is it won't be less than 0. That's the only guarantee on your retirement account. So just really understand, what is your money doing? So let's talk about this money multiplier method. What is this method? Well, it's simple. It's 3 parts. We're going to make everything simple as Sipple. 3 parts. It is, number 1, it is the machine. And I'll tell you what the machine is here on one of the next slides. No secrets. And it's a marathon. It takes time. And if you guys know me, you know that I don't do marathons unless I've already swam 2.4 miles and ridden at least 112 miles. Then I'll run a marathon. I don't want to run that far unless I've done the other things first. The first thing we teach with infinite banking You're like, Jason, I'm not going to do an Ironman. Like, what are you talking about? Well, the first concept of infinite banking is think long term. There's always two of us. There's always our present self and our future self. We must act accordingly. So we want to show you how you can use this for today while building for your future, a marathon. And finally, we're going to map out the millionaire mystery. And some of you might say, whoa, I don't need that. I just need a little bit more security. But just know that when you see how this works, when you see how we help people recapture, recycle their debt, that it just happens over time where you'll map out that millionaire mystery. It won't be a mystery anymore. You will have a roadmap, step by step by step to get where you're going. So Jason, what is this machine? What is this machine that we're going to use to build, keep, and create more wealth? Well, it's nothing more. Might be a letdown. It's nothing more than a dividend-paying, whole life insurance policy from a mutually owned company. And you're like, that's it? It's a whole life? That's all we're talking about? Yes, but it's specially engineered with cash value. And I'm going to skip part of this slide because I don't want to give away the punchline to the next thing I'm going to teach you. But grab your pens and paper, right? We're almost at the halfway mark, so grab your pens and paper. This is interactive. This is for your family. This is something that if you have better handwriting than myself, you're going to hang on your fridge. I just did this on my last phone call. Draw a T chart, which here, if you guys are, shape challenged, letter challenged, that's what your T chart looks like. Top left, you're going to write bank. Top right, you're going to write policy. Under bank and policy, you're going to write the word liquidity, okay? Well, who here, write in the chat, drop it down below, who here knows what liquidity means? What do we mean? You guys, that means that your money is available. It's accessible. It's not locked up in money prison where you can't touch it till you're 59 and a half years old. It is access to your money. You made the money. You want to have access to the money. So banks, policy, pretty equal there. There's liquid, right? So just think it's the same thing. Under bank, 0.07%. That 0.07% is what banks, conventional banks, are paying you, me, the person that is storing their money in the bank, the interest that they're paying. Under policy, write 3.25%. That's the first guarantee that we can talk about today. The first guarantee. That's a contractual guarantee with one of the 5 A+ rated or better mutually owned dividend whole life companies that we work with. Jason, why are there 5? Well, we need different companies to solve different problems for the folks, different opportunities for the folks we work with. So we work with the 5 best in the infinite banking space. We don't want to be beholden to anybody. I don't want to try to fit you guys into a round peg into a square hole or other way around. So that is your guaranteed contractual guarantee. Now let's look under bank. Write this down. Taxable. That massive 0.07% is taxable. So that 38 cents, that 40 cents you made in your savings, that's all taxable. Wow. That has to go in your tax returns. In the policy, tax-free. Tax-free growth, tax-free distribution, tax-free loans. Remember the harvester of the seed, the money goes in now after taxes and grows forever. Uninterrupted, compounding, tax-free. Who likes the sound of that? You can stop right there. That's already a winner in my mind. Under bank, unstable. Think about beginning of 2023, the Silicon Valley Bank, the banks that followed. The current banking system being a fractional system, when people get worried because the banks have made a pretty questionable decision, people that rush to get their money, the banks don't have enough money to actually give everyone their money. It's no longer there. So not stable. Under policy, stability. All 5 companies we work with have been financially stable or profitable for over 100 years consecutively, between 100 and 160 years. The example there, the 3.25% guaranteed interest, is a company that's been profitable for 147 years consecutively. That isn't guaranteed, but tell me that's not impressive. In the bank, unprotected. Write down unprotected. What do I mean by unprotected? Well, if you own a business, if you own some properties, if someone falls, get hurt, someone sues you, if there's a good attorney, liens in judgment, they can come get that money in your conventional bank. With a policy, the money is protected from liens and judgment. So far, I clicked too fast, but so far we've talked about the whole life, right? This isn't death insurance. This is your living insurance. These are your living benefits. Liquidity, so accessible, guaranteed growth, tax-free growth, stable environment, again, control, and protected. Protected. Who doesn't want protection of their money? Now, under the bank, whatever you have in the bank, it can be used for the things that you want to purchase, for what you want to do, but does it give you anything extra? Is there any cherry on top? Do you get a cherry on top of your sundae? Do you get some whipped cream and sprinkles and other things? No, nothing else. But with the policy, you have a guaranteed estate, a guaranteed tax-free estate. That's a multiple of whatever the cash value is. We don't focus on this, but when I show you guys this chart, when you write this chart and you're looking at it, and you're just thinking about it, just look with a new mind. Look with a mind where you're like, okay, I see this, Jason. And if I ask you, you'll know the answer immediately. Where do the banks keep their money? Where do the banks keep their money? Well, obviously, they keep them in policies. It's why banks have quadrupled the amount of whole life. Just look up bank-owned life insurance. If I haven't said this already, please use our other buddy, Uncle Google, or Mrs. Google, and ask her questions. Ask your ChatGPT. Ask questions about what I'm sharing today and just verify everything. Don't take my word for it. I am teaching you all how to fish. I don't want to fish for you. But banks have over $202 billion of specially engineered whole life. That's why there's so many presidents. We've got a guy on this call right now. His wife worked for the bank. They took a policy on her. Guess what? They have the cash value. My buddy here that's trying to figure this out is trying to figure out, is there anything, do they maybe offer, like when my wife's passed away, will her beneficiary get any money from that policy they hold on her life? That is bank-owned life insurance. So if the banks are keeping their money in this and not in their own banks, where do you think you should store your money? Just where? And now let's talk about how does your money flow. Let's talk about something now. This might blow your mind. It took me, not joking, 19 times to get this. I'm sure my other partners at the Money Multiplier got it right away, but for whatever reason, this was a big sticking point in my mind, and I want to walk you through it. You guys are going to imagine me working at a bank. Something that'll never happen, but now I am in your mind, in your mind's eye, I am Banker Jason. You, the wonderful patron of my bank, want to buy a new vehicle. This new vehicle is beautiful. Imagine your favorite color, your favorite interior, the favorite smell. Imagine that big old, dashboard with all the electronics and all the navigation system, everything you could want, all the bells and whistles. And you've been practicing the discipline of saving. And you come into my bank, because you've been saving now for 3 years, and you have saved $25,000. $25,000. And you walk into the bank, and I am Jason the generous banker, and I'm paying you 4%. Now we know this is pretty fictitious, but just imagine in this bank, I'm paying you 4%. You already like me because I'm already doing right by you. And you come in, you're like, oh man, Jason, I've got this car of mine and I am so excited. I've been working so hard, overtime, putting my money into this bank. You've been giving me this nice 4%, but I need that money. And I'm like, whoa, hold on, Linus, hold on, Frank, hold on, Sally, hold on. What if I give you a loan? And I give you a loan for $25,000 at 6% for 60 months. and I'll keep the money, your hard-earned money, the money you've earned in my bank, keep paying you 4%. And at the end, and I make this strong declaration, at the end of this time, Linus, after these 5 years, you will have made money. Am I telling you the truth? Yes or no in the chat. Am I telling you the truth? If you said no, that's what I used to think. Because you're saying, Jason, you're charging 6% and you're paying me 4. 6 minus 4 is 2. 2. So let's look at the monthly payments of that vehicle. It's almost $500, $483 a month. And your total that you've paid, the future value, and if you want to do this on your own, go find a time value money calculator. There's lots of sites that offer the tools to do this, so you can do it yourself. I had to do it myself 19 times, so I figured it out. But your future value is $28,999. Now the money that I was paying you 4% on has grown to $30,525. I'm down here in Florida, so I don't know about all of you guys, but is $30,000 more than $28,000? Yes. You've made click fast. You made $1,525 over that period of time. If you added more zeros, you would make more money. Because in one instance, you have uninterrupted compounding interest that's growing steadily. And on the other hand, you have a depreciating balance that you're paying down over those years. So let's talk about the same generous bank that's paying us 4%, and you are storing your money here. Because what happens? You get paid, where does your money go? Today, everyone who gets paid, no matter if you're a W-2 employee, an entrepreneur, a business owner, a trust fund kid, when you get paid, your money goes where? To the bank. So we're depositing $100,000 into our bank. Now when we deposit this money, is this a liability or an asset to the bank? Right away, you might think it's an asset. We just put $100,000 in there. That's an asset to us. It's liquid cash. To the bank, it's a liability. And Linus knows, so it's a liability. So immediately the bank has to do what? Remember what money has to do to make more money? Money has to move. So the banks lend it out. They lend it typically to someone buying a home. And they're going to charge 7%. Now the seller is going to put the money back in the bank. Now the bank says thank you very much, and they take that same money and they move it again, and they lend it to someone buying a car. This time they're charging 8% because there's a little bit less time and maybe a little bit more risk in a way because of the less time. So a little higher percentage. The banks are the best at this, so don't get too mad at them. Just pay attention to what's happening here. The dealer is paying back the bank. That money's in the bank again. Does it stay there? No. Liability. It goes back out for a home improvement. Now they're charging 9%. The whole time they're paying us 4%. So they're charging 7%, 8%, and 9%. Right now, how much risk has the bank taken on? How many hoops have people jumped through to get the house, to get the car, to get the home improvement? How many they've applied, they've begged, how many banks have you talked to? And the bank hasn't taken on any risk because every single thing here, they have a lien on. They have a first position lien. So now the banks say, well, you know what? People really want things now. We're going to lend out some more money after we get our money back from the contractors to someone that's doing a debt consolidation. Think about this. You store your money in the bank. You want something. And then we start paying the bank interest in all sorts of ways. It's brilliant. Why didn't we think of this? Oh wait, we did. So now let's look at these spreads. Right now, back for this one. This one's the highest interest rate because there's more risk. So now when we look at this, we're going to do the math together. 7 minus 4 is what? It's 3. 8 minus 4 is 4. 9 minus 4 is 5. Okay, we're just adding up the percentage. How much the bank's paying us 4%. Let's see how much money they're making on our money. And the last one, 12 minus 4 is 8. If you guys are keeping track and adding this together, who's good at math here? Pop in the chat, what's that number? It's 20, right? So have the banks, Linus, you are sharp. So the banks are making 20% on your money. You're making 4%. So they're making 5 times as much. You know, that's not a big difference, right? Well, really, it's actually 500% that they're making on your money. 500%. Go to Bauer, this is shocking to me. Go to BauerFinancial.com, pull up any bank you want. Pull up your credit union, pull up any big bank. They make between 400 and 1,300% annually. Imagine getting a 400 to 1,300% annual return on your money. This is why banks have the best real estate, the best dressed people, the nicest marble, all of those things. I used to think when I was younger, like, I wonder why banks are in just the nicest area. What do they do here? This is giant, the biggest building in the city, and they don't do anything. They give us dum-dums in return, and I like the grape ones, but we're paying for that. So just know that remember, go to Bauer Financial, check it out. So let's look. Now that we showed you what the banks are doing, let's show you how they've groomed us to spend our money to take on the risk. So they've groomed us in our annual pattern of spending. 20 cents of every dollar, and this has been true for the last 30 years, this breakdown, 20 cents of every dollar, or a little bit more, we're spending on cars. The next 30 cents of every dollar is on housing, 40 cents to everything else, and I'm going to be generous and say that we're saving 10 cents of every dollar. If you look it up, Google it, we're actually saving about 3 cents of every dollar. No, not you guys. You guys are paying yourself more than this. You're paying yourself at least 10%, if not more, because that's the first law of being wealthy. Whether you're reading Rich Dad, Poor Dad, The Richest Man in Babylon, the Bible talks about this. We want to pay ourselves first. So now let's look at how much of this dollar is actually interest going to somebody else. So of every automobile, it's about 5 cents. So imagine us taking back control of that 5 cents. Remember how I said we're going to grow our money through our debts and we're going to turn them into assets? This is how we do it. Our housing, 25 cents of every dollar. If you've bought a house in the last 7 years, do not, I'm begging you, don't go look at your mortgage statement. Just don't do it. You'll cry, you'll need a drink. Don't do it. Just don't do it. 70 to 80% of what you're paying to that loan is actually going to the banks. Because why? The banks are smart. I've already told you this. They know we move on average every 5 to 7 years. So imagine taking that 25 cents back control of that. Now you got 30 cents of every dollar. Look at your savings. It's an improvement. Of everything else, we're going to call it 5%. I'd say that's probably a low number considering we're paying an average of 24% on our credit cards nationally right now. So look at the savings now. So imagine giving yourself, show of hands, give me an eye, if you want a 34% raise in the next year, immediately. Would that feel good? Well, with a little bit of discipline, a little bit of structure, a little bit of vision, yeah. See, we all want this. So why don't we all have it yet? So let's go to just a fun exercise. Chris likes to talk about Porsches. I want to talk about trucks. I live here in Florida. Look at that truck. Tell me that is not a beautiful truck. I'm going to pull up the hood of this engine, and I'm going to show you how you get every dollar back for every car you buy, drive, and own. Someone told me, a friend of mine who's a multimillionaire, Linus, told me that more millionaires drive Fords than any other vehicle. I like that. I drive a Ford F-150. Not that particular one, but one day, a vehicle like that. So let's think, I want you guys just to be more exciting. Write down in your notebook right now, what is your dream car? What do you want? Where is that? Remember, we want to keep thinking what's possible, and then our mind will help us find those reasons. So let's get mathematical here. Let's show you how you're going to buy your vehicles, every vehicle you buy, drive, and own through this system by talking about your premium deposits. Remember, right away, the first change in all this is think about how you feel when you get paid. You're pretty excited when you see the money go into your bank account. It's the same thing when you're putting money into your privatized banking system. So we call them premium deposits. And our age doesn't matter. Our death benefit doesn't matter, even though it's a huge cherry on top. But let's just go through. So we're going to imagine, remember the $25,000 car. Now, don't get caught up in the numbers. Whether it's a $25,000 vehicle or a $250,000 Ferrari, like the doctor I talked to who paid for that car in cash. Will he ever earn money on that money again? No, he will not. He gave up the opportunity cost, right? We finance everything we buy. That's another truth I want you to walk away with today. So in this example, we're going to deposit $10,000 annually that we were saving anyhow, but instead of storing it in the bank, in the conventional bank, we're going to put it in our specially engineered whole life. And we're going to do this, and after 3 years, we've deposited $30,000. We've got enough cash value to buy that $25,000 vehicle we've had our eyes on. And if you want to buy the Ferrari, just add more zeros, same equation. And now we're going to go to bankrate.com, or we're going to go somewhere, and we're going to see how much is the going rate for this vehicle. We've decided it's $500 a month in principal and interest, and we're going to pay it back to ourselves over the next 5 years. So now we're going to get to the end of this time. We've done $70,000 in premium deposits. We've paid ourselves back $6,000 a year, which is $30,000. We put in $100,000, and we've taken out a loan for $25,000. Now, that's $75,000, and look at the number right above that. We still have cash value of $67,881. So if you divide that by 75,000, this is how you get 91 cents of every dollar you've invested and the vehicle. I'm just going to tell you this answer without asking the question. There is no one here, unless you're already practicing infinite banking, that has ever bought their car, drove their car, owned their car, and at the end of the 5-year term that they've paid back to themselves, had 91 cents that they would have spent to that car of every dollar and the vehicle. So this gets better. We're going to do something that's absurd. Now, when our policy is super efficient, we're not going to put any more premium deposits. We're going to say we're done after 7 years. For a lot of these, you can be. You can make that decision. But we're going to buy another vehicle in year 8. We've got the cash value of $67,000. We're taking out a loan of $25,000. We're doing the same thing. We're paying ourselves $500 a month. I'm going to speed this up a little bit for you. So now we put $30,000 in, taking $25,000 out, and look, we have grown by $23,592. So now, by car 2, you're making money. Car 3, you're making more money. So is there a better way to buy vehicles than this with a little discipline and vision? I say there's not. But let's look at the 3 rules that we practice with this. First, we got to pay ourselves first, as if our life depended on it, because it does. We want to pay ourselves first. Remember, when the oxygen mask falls down in the airplane, who does the stewardess tell you to put on first, or the steward? On yourself, and then you help everyone else. It's the same with money. Why treat money any differently? Pay yourself with interest. I already showed you how 34 cents of every dollar that you currently are paying out to third parties is going to somebody else's wealth. Bring that back to your family. Number 3, recycle and recapture your money. If this works for the car, for the truck, what else does it work for? What else? We're going to go through an example, and I'm going to show you, I've been promising this for a while, how you can recapture and recycle money. I'm going to show you a real life example. This is a chiropractor that Brent personally worked with. Brent was a chiropractor himself, so similar example. And if you don't know who Brent is, Brent is the founder of the Money Multiplier, one of my mentors. Right now, I'm going to peel back the curtain further because Albert Einstein once said, we have to know the rules of the game and play them better than anyone else. So let's look at this guy's debt. It's pretty normal. We got a Discover card, a Nordstrom's, Wells Fargo, a private loan, a BMW. Probably has a lake house, or a lake condo, so he has a boat loan, a house. Pretty normal, right? Pretty average chiropractor kind of overview of his money. He weighed in. This is what his profile looks like. He's got $478,000 of total debt. $5,777 a month he's paying towards his debt. It will take this doctor 19 years if he just keeps paying the minimums the way he's doing it now. Okay? So rather than doing that, this is him saving already $25,000 a year. So now, instead of that, we're going to build a policy for him. And we're going to show you how it's a marathon and how it looks over time. And we'll do the same thing for you. If you have debt, we will map this out for you during your process. Deposits $25,000. Year one cash value $14,863. We take that as a loan. We pay off the first two debts, pay down the third, and Doc has recaptured $448 a month. So now we continue through the year. He pays himself $448 a month because he was already doing that. Year two, we make another deposit. He pulls out that loan again. The $5,374 is the $448 that he's been paying himself. We got $21,000 in cash. We're going to pay off the next few things. Now we're going to recapture some more money. Now Doc's recaptured almost $24,000 a year. Okay? So looking at this, we're going to do the same thing in year number 3. And look, he's already down to 4 debts. Puts in $25,000. He's already reached the efficiency point. And now he has over $25,000 available. He's paid himself back $23 and change. Got $48,000. We pay off the BMW, pay down the boat. Now we recaptured additional monthly income. $3,677 a month he has recaptured. You guys following how this is working? We get, so far in this marathon, how much did he put in? $25,000 a year. For 3 years, 75 grand. He's taken loans out for, a total of 55,000. You guys are good at math. How much is left in the policy? Did you say 20,000? Right? Is that the answer we all came up with? Well, no. The answer is all $75,000 is still growing uninterrupted and compounding. If you went, whoa, wait a minute, what do you mean? You never borrow your money. You're taking a loan from the life insurance company. So that money is earning uninterrupted compounding interest at that guaranteed rate and most likely earning you dividends. So let's continue. We're in year 4. You're all wondering, when will the stock be out of debt? It's going to be 19 years. Let's see how fast he gets out of debt. Deposit another 25 grand. It's worth a little bit more. He takes that 70,000. Pays down the condo, but we're not completely out of debt now. Year 5, he's got more money he's saving that can go into this policy. He gets more cash value. You get more payments back. He's got $44,000. He's going to knock out the condo, knock down the house. We're going to go into year 6, and at this point, he's going to have more money than he can put into this container, and it's going to be the time to start a new policy. And this often happens within the first year with people we help. But this doc, this example, real life example, he's depositing $10,000. Now he's got the cash value. He deposits another $25,000 to a second policy that gives him $13,092, right? So he's got the 2 policies plus the payments back to himself, 82 grand, 6 years. He has blasted away all of his debt and recaptured $5,700 a month, right? Just do the math yourself. That's almost $72,000 a year. Anyone here could use a $72,000 a year raise? And that's within 6 years. And now we've added this new tool called the Debt Blaster, where we will show you if we had your particular debts, during your application process, we will show you, is an avalanche the fastest? Is this snowball the fastest? What is going to be the best fit for you? And we even will project, if you have no debts, that's okay too. We'll project gains. If you start lending money, what would that look like? How would the policy help you accelerate your financial growth? How would it help you build more wealth? And then once you have a policy in place, I always ask people, do you believe that knowledge is power? Almost everyone says yes, but I say, wait, is it powerful if you don't apply it? No, only applied knowledge is power. I partner with a money multiplier because we provide an implementation specialist, and we're not charging for that. We're providing someone to hold your hand because we understand that it's the process of banking. It's not the specially engineered whole life that's powerful. It's the banking process. And we walk you through it, we hold your hand, and we show you how you can build, keep, and create more wealth, how you take back control of your money. So everything I just taught you, I'm going to ask you one of my favorite questions, and I've had some pretty graphic answers here. So how do you eat an elephant? How do you eat an elephant? One bite at a time. One bite at a time. You have elephant steaks, you have elephant stew, elephant salad. You find a lot of different ways. That's a big animal. That's going to keep you and your family fed for a long time, but you can only do it one step at a time. So how do you make progress? One step at a time. Like it says right there, the man at the top of the mountain didn't fall there. He made progress. She made progress. And progress, folks, equals happiness. So I want you to say to yourself, yes, I can. See that visual of what you want. And we don't make progress without falling down, and that's why we've got you. Give yourself the permission to ride a backwards bicycle and say, hey, I don't know this ... yet. You're just starting, and when you make progress, celebrate. Wire that into your nervous system. Is it possible to owe no man nothing? The machine worked for debt. The machine worked for buying a vehicle. What else would it work for? Vacations, homes, second homes, beach homes, taxes. I have a video showing you how to pay off your debts and make money paying your taxes. That's pretty sexy. Tuition, building a business for your kids. We're only limited, right? Our fifth principle is rethink your thinking. We're only limited by our imagination. So let's go back and say we continue to pay those debts from that chiropractor's example. What would happen if we kept paying ourselves back? Like I said, $5,777 a month. Now we keep paying the condo for that period of time until it's paid off. That's 251 more months, 220 grand. Now we have 224 months with a house. That's 400. Remember, we're mapping out the millionaire mystery. That's $493,000 that's come back into our wheel of wealth. But it gets better. Remember, that's been earning uninterrupted compounding interest. So now if we actually look at the number, we've recaptured $750,000 that we would have paid over that 30 years, and the house and the condo are paid off. So now that you guys know how to do this, everyone should do this. If you're not, what's happening? You're stealing from your kids. You're stealing from your grandkids. Yes, that's harsh, but it doesn't matter if you make $10 an hour, $10,000 an hour, $100,000 an hour. You need to be doing this. This is how you take back control of your money from the banks. This is how you take back control of your money, protect your family, and grow your money guaranteed. The Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays, they all understood how to keep money in their family. This is how they did it. We saw others, Warren Buffett, Tony Robbins, Robert Kiyosaki, all talk about this. So this isn't something that hasn't been known about for hundreds of years. If you want to break free of financial slavery, stop giving up control to the bank, stop taking on the risk, you need to be doing this. If it's not for yourself, for your family. You're letting money leave your family if you're not doing this. As Warren Buffett said, if poor people would just do what rich people do, they wouldn't be poor no more. So Only one of two things are going to happen in your life. Only one of two things. I want you to ask yourself right now, are you better off? Because the only one or two things are going to happen. You're either going to live, or at some point, I don't know anyone who's beat this yet, but at some point we'll no longer be here. You're either going to live or you're going to die. So, are you better off with or without this? I think you know the answer. It's probably in your notebook. So, thank you for lending me your most valuable resource today. Your time, your energy, your focus. You're doing what 95% of people will never do. You're already in an elite group. You're the 5%. A decision's here for you. You can either take radical ownership and action. Because remember, without applying knowledge, nothing happens. Some of you are going to take action, some of you won't. You now know everything you need to know to change your family's financial future for the better and your family's financial future for the better. What you choose is up to you. You can schedule a free call with me right there in that strategy session. So thank you for lending me your most valuable resource, your time, your energy, your focus. You rock. I am blessed to have been able to share this with you. This has changed my family's life. We have recaptured over $134,000 back into our family and protected our family. You have a decision to make, and I'm okay with whatever decision you make. It's your decision. You can either book a call with me down below, book a free strategy session, and we will talk about and map out your pathway to building, keeping, and creating more wealth. Or go to this next video, check it out, and learn more about the infinite banking process. Be blessed.